I'm joined today by Charles Hazen, President and CEO of Hines REIT, a publicly registered, non-exchange traded REIT. Charles, could you start by telling us in a sentence or two about Hines' core strategy?
You know, this year we really think it's all about taking care of what you have. You know, in the current environment that we're in right now with property fundamentals still in a bit of a decline, and you know, no one's really sure when things are going to begin to recover. We think it's really important to take care of your tenants, making sure that we're being responsive and doing everything we can to make their occupancy experience the best it can be, and also taking care of our investors. You know, being really focused on communication and responsiveness in that area as well.
And as a non-traded REIT, what advantages or challenges does Hines have in the capital market situation compared to you know, publicly traded?
It's different. Obviously, the traded REITs have had a pretty significant run in terms of raising capital over the past 12 months. You know, that was pretty significant. On the non-traded REIT side, we also saw a fair amount of capital being raised. In 2009, it'll probably be in the range of $6 billion plus or minus, which for us is down over some of the prior years, but sort of back to where it was in 2004. I think we're different in that regard. We tend to be much less volatile. That is, there's much less capital flowing in and out and volatility in our share prices. But I think in general, just dealing with you know, the real estate markets themselves, things are pretty much the same.
And speaking of the real estate markets, what are your expectations for 2010?
Well, 2010 I think is going to be a year of transition. You know, we saw back in 06 and 07 where essentially all real estate was lifted by the bubble that we were in. And 2009 was a year where there was a real lack of capital and lack of transactions. So as a result, I think the markets were trying to sense where the bottom was. I really believe that we've seen the bottom now. And 2010 will be a year when I think we start to see things turn around. On the capital market side, we're already seeing positives. The traded REITs have been able to raise capital significantly. The lenders are back in the market again, but they tend to be mostly back in the market for the higher quality assets in the best locations. So I think 2010 you're going to see those assets really perform better. I think you're going to see a lift in values from what we've seen in 2009. I think we've seen the bottom, and I think we're going to start to recover.
Great. Charles, thank you very much. For REIT.com, I'm Matt Bishar.